Hello and welcome into the KE Report. Shad and Corey here as your host, and today we're chatting with our friend and colleague Erik Wetterling. Erik is the Hedgeless Horseman, and we'll put a link down below to thehedgelesshorseman.com so you can follow along with Erik's thoughts on the market and some of the companies on his radar. Erik, we were talking about a lot of different companies off mic, but one that I think is front and center today as we kick off this week is Silver Tiger Metals. Silver Tiger Metals is traded on the TSXV under the ticker SLVR, and they received on Friday after the market close the permit for their open pit in Mexico. Now, this is the first official new permit that we've seen out of Mexico, even though we've seen about 48 addendums and pit pushbacks and a lot of different things on existing mines. Silver Tiger just picked up the very first open pit mine permit that we've seen in many years in Mexico. And as a result, many other companies, both silver and gold in Mexico, are spiking in sympathy with this news because it shows that the company really is moving forward with the permitting process. Your initial takeaways from Silver Tiger picking up the open pit permit?
I mean, obviously, it's great to see. I met with Silver Tiger not too long ago at a conference, and I mean, I had been following the company for some time, but hadn't revisited in months. And as you know, I mean, I really like the second part of the Lassonde curve nowadays, and they have quite a bit of gold as well. I mean, silver's doing great, obviously now, but the gold has been doing even better. So that was a very interesting one. I mean, I think the case was pretty obvious that they already have, something worth mining, and they have a district with full of exploration potential. So, but the limiting factor was like, yeah, the second part of the Lassonde curve is only possible if you actually can get the permits to go into the second part of the Lassonde curve. So, I mean, that was kind of the bet, and what I assume was holding back the stock. And I'm not an expert on Mexican mining politics, but it feels like it was worth a bet. And who knows, maybe it's actually even better risk reward today, even after the spike, because that uncertainty is gone and now there's green lights. And for the sector overall, I think it's great because there's been a bunch of people that have kind of had, unfavorable experiences with, let's say, Mexican juniors in recent times. And to see this stuff, I mean, the permit has so much signal value, obviously. And as you said, there's other Mexican open pit developers or advanced explorers that are going up in sympathy because that's, signaling that, hey, this is actually possible. You can get new permits. So I think it's great for the sentiment. I think it's great for, people's obviously experiences with Mexican juniors today. And there's quite a few around. So that's not bad at all. And I, for example, own some shares in Sonoro Gold, which also has an open pit project in Mexico. And I mean, many of these projects obviously are no-brainers at these metal prices. So a permit to mine has probably, especially if you have some gold or a lot of gold, has probably never been higher because the gold margins have never been higher. So yeah, it's a big day.
It is. It's a big day. And in all fairness, also a good day for the metals prices. Silver is up back at $50 an ounce. So this really is kind of the perfect storm for these silver plays. And look, there's a lot of green on the screen today, a lot of green from those Mexico plays. Erik, should that be the strategy? Is this kind of the green light for you think, we think, or anybody thinks that's been sitting on the sidelines waiting for some permits to be granted, that we can just go ahead and start buying these Mexico plays that are waiting for these permits because permits should be coming more regularly now that Silver Tiger has them?
Well, I would think so. Again, I'm not an expert on politics, and I try to keep myself from making too big mistakes, trying to read in or figure out stuff that's kind of, outside my ballpark. But if you have a very, credible team that's good in most parts of the mining business and community relations and all that, yeah, I do think this is a big thing. Now, I don't know how long it's going to take for the next permits. Is it going to be like the ketchup effect, where it's like once it gets released, everybody's going to get them? Maybe, maybe not. That's what I don't know. But obviously, there's finally proof of concept that it's not a total ban. So I think that's for sure worth something. But also, again, I wouldn't consider anything to be 100% set in stone. So I think it obviously de-risks these projects. So let's say it increases their chances of, or any of these other developers of getting their open pit permits within the next 12 months. And then you have to decide, what's that percentage? What's that worth? How much were they punished, for example? So it's hard to just give a blanket statement like that, but I for sure would be probably thinking that after this news, even with some of the other Mexican developers, if they've gone up, I would be guessing that they're not actually, worse risk reward because price goes up, because this has quite some, I was going to say, de-risking value behind it.
Well, Erik, just another question for you with regards to this. The metal sensitivities for just the open pit, if you use today's prices for gold and silver, and I think you're right, I think it's 80% gold and 20% silver in the open pit. The underground is just the reverse of that. It's 80% silver and 20% gold. But since it's so gold heavy on the open pit, I was at a breakfast with the Silver Tiger crew just in New Orleans last week, and they said that the NPV of just that, the open pit, at current gold prices is almost $1 billion. They're getting ready to put out a PEA on the underground, which is going to have all that silver. And I'm guessing it comes out at, let's just say, $500 million or more, somewhere in that range. So when you think about what's happened now with this permit, does that unlock a better multiplier in the valuation, in your opinion, to not just this open pit, but also, I don't think anybody would even have cared about the underground coming out before this permit. But now that they know the up above is going to happen, the down below value is going to come into a check. So how do you value something like Silver Tiger now, where they're going to have both the open pit and the underground value drivers?
Right. I mean, that's a very good question. And that's why I think, every case is different, because there is one version, let's say if you have a company that only has, or let's say Silver Tiger, and they only had the open pit project, and this news comes out and you're like, hey, it's probably worth more just based on the open pit project itself. I mean, is that enough margin of safety compared to some other projects? Would be it might be cheap, but is it one of the cheaper ones? But now, as you put it, it's like, hey, it's heavy on gold, and gold has the probably highest margin still, or typically at least. I mean, at these gold prices should be churning out money, which then helps, of course, to unlock and pay for the silver, or the more silver dominant underground potential. And maybe they can self-fund it, maybe partially self-funded, whatever. Dilution should be at least going down versus not having a gold heavy open pit mine. And then you have also the district potential. So it's like the knock-on effects from being able to permit this. I mean, it's like the first part of a three-part story. Maybe it's like open pit, underground project, and then the exploration potential. And those are the stories I really like, where it feels like you're getting a huge amount of optionality. That's like, okay, is it dirt cheap just based on the project that just got permitted? Maybe not. But if you add on the other stuff, it's like you're kind of getting the underground project for free, plus all the exploration for free. So a lot of things can go right. And assuming they're, quite competent mine builders and operators, they probably won't mess up an open pit project, because this one is not also the largest in the world. It's not a $2 billion capex, for example. So I mean, I would just say I see the risks being to the upside, and I see them having basically a growth curve, value increasing curve that could go on for quite some years. And that's why I also put it in the hodl folios, where it's like, I don't know exactly where this is, might be trading in 1, 2, 3 years, for example, but I can see a lot of reasons why it could be higher.
Hey, I get it, Erik. It's entering that good part of the Lassonde curve, and quite frankly, it's just not very expensive to build. I think it's under $100 million capex for that open pit. One question then, when you look at these companies that when they do receive their permits, how closely do you look down at their team to see some sort of history, some sort of bench strength that shows that they can build these mines, whether they're easy or hard, at least some team already in place, or do you even care about that?
I mean, that's something I probably should become better at. I mean, it's hard when you don't know everyone, I was going to say, and maybe you're not a Vancouver insider who knows people that knows every people, for example. So there takes a lot of, let's say, signal value. I mean, it appears the backers of these companies kind of the same people behind GoGold, and I know a lot of people I think know this sector well who are in GoGold. So it's kind of guilty by association that I think that if you have competent backers, they're probably going to make sure that there's competent people getting involved, for example, and that's why I keep saying foolproof your portfolio in a sense. I mean, I really put a lot of weight on a third-party validation or signal value from who gets involved, who's backing it, for example. Because if they've kind of done it before, they're probably going to do it this time around as well. And then you don't really. I mean, if you have just an extreme example maybe, but if you have a junior that's backed by the Lundins, I mean, do you really need to check up who the team they put into the company, what their resume is? No, not really, because the Lundins are probably the best at also picking what the most competent team. So I feel kind of okay with the picture in Silver Tiger, and of course sometimes you can look at someone's resume or whatever. I mean, the resume is, as always, like a social media. I mean, you bring up stuff that makes you look good. I mean, I know some management teams or people who have had some failures, but they don't show up on the resume. So it's like I can also get fooled by resumes, etc. That's why I am more typically look for, let's say, obvious cases and where, okay, sometimes you actually do really know that the team has had a big success or something like that. But otherwise, I think it's almost easier to just look at, who has money at risk. Have they had successes before, because they're going to hire the people they think can pull it off because they have every incentive to do so.
Yeah, good points, Erik. I think in this case, you brought up GoGold and Silver Tiger. They are kind of sister companies, and their team has put 3 mines into production already in Mexico. This will be mine number 4. They've already got the term sheets put together that Glenn has mentioned. He's got 3 on his desk, and so he's already got the financing raised, and their operations team already has a detailed list that they've already released to people showing exactly what they're going to do from day one once they get the permit. So I think it's a 12 to 18 month build. They think they can get it done closer to 12 months. So at least this is a team that has built mines before. We'll definitely keep following along with the story and try to get Glenn on the show soon just to give us all an update. But another company that's an interesting thing that's happened in your portfolio is what's been going on, I guess, on the capital market side, but also on the drilling side with Altamira Gold. We were talking about that off mic, traded on the TSXV under the ticker ALTA. And they just put out news to the market just at the very end of last week that they raised $6.3 million through the exercise of warrants. They also had mentioned earlier in the week that they had mobilized a second drill rig to their project in Brazil to press the bets on the exploration side. So any thoughts here as far as the drill program currently beefing up at Altamira Gold and also bringing in capital through the exercise of warrants, which you decided to do yourself?
Yeah, I mean, I think Altamira recently and currently has been a very interesting case from market dynamics perspective. Pretty good case study, I was going to say, because Altamira for the last few months have been putting out very positive news, in my opinion, that they drilled their first deep hole at Maria Bonita and looked like it was mineralized for like 400 or 500 meters. Then it came out that I think they hit around 400 meters at 0.4 grams per ton, basically starting at surface. And the metallurgical results that's been done preliminary look very favorable. And there's other operations in Brazil, for example, that mines even lower grades than that. And of course, I mean, it's not barn burner grades, but hey, that's a huge amount of mineralized rock. And then they also started drilling some of their 11 other porphyry targets, and they're all believed to be pretty much near surface porphyry targets. And they hit Tavares Norte, they hit, I think, 0.3 grams per ton over. I don't remember the widths exactly, but while this was kind of going on, we were coming close to a bunch of warrants expiring at 20 cents. So it first went up on the, string of good news, then it started to go down, and I'm pretty sure it, and we're gonna see later that yes, I am pretty sure it went down due to warrants expiring. So it started to go down, and then of course nothing changes price like sentiment. So then people air their thoughts as like, hey, maybe these results were not that good, and somebody say, hey, the most recent discovery, 0.3 grams per ton, is not good enough. Where it's like, well, in reality, that's a 1.8 kilometer long soil anomaly, and they put, I think, 2 holes into it, and they haven't even drilled a higher grade part of the 1.8 kilometer soil anomaly. So just to hit anything, basically, 0.3 starting, basically at surface, that is, of course, very encouraging. But that's how it starts to affect people. And I was kind of, I was telling people that, hey, there's warrants going to be exercised, and the expiration date is 6th of November, I think, at 20 cents. And magically enough, it reached 20 cents at the date of the expiration, basically. And I just think that's also a good case where it's like, we know people hate warrant overhangs, etc., because it can do stuff like this, where it's like the fundamentals are trending up, and all of a sudden the share price starts to trend down. And then people are like, hey, I thought the news was good and all that. And some people, might get scared and think that, hey, the market is saying things are getting worse. While they're not. So as a holder, you're short-term getting punished because the price is going down on artificial selling, and I'm assuming there might be some buyer strike because people again know that there's 20 cents warrants and there's millions of them. And then maybe people were waiting to see what Aura Minerals, I think they're $4 or $5 billion market cap, who is a shareholder and have a lot of those warrants. Like, what are they going to do? Do they still like the story, etc., etc.? So all of that came into play, basically. And the crescendo, I guess, was, within the last few days, where price went to 20 cents. And we now know that Aura Minerals actually exercised all their warrants. So it's like, in my opinion, if there wasn't that warrant overhang, would never have been at 20 cents right now. So yes, you get punished as a holder, at least short term, because price went down. But at the same time, you also get then the opportunity to get in at a price level that, again, probably shouldn't be here right now, but was only possible because of the warrant overhang. So like, bear market, for example, or a correction of any kind. I mean, it's not really good or bad by definition. It's more like good or bad depending on what you do. I mean, if you bought the recent high and then sold the low because you got convinced by the market that things weren't as good as you thought all of a sudden because price was going down, you might have sold the low at 20 cents. Then that was a really bad thing. But if you, let's say, were a buyer instead, you might have been able to get shares that might be trading a lot higher than 20 cents in 1-2 years. And you would never have gotten the opportunity to do so if it wasn't for the warrant overhang. And I actually exercised all my warrants at 20 cents when the price was 20 cents. And I don't usually do that, but I like this story a lot. And I simply think it would be hard to buy that many shares in the open market, basically at that price. So that's not something I do typically. Then I really got to think it's a good case, and that there might be liquidity problems.
Yes, Eric, this whole topic came up when we were chatting off mic before recording, and I just asked what your warrant strategy was. If you would exercise warrants usually close to the exercise price, because anyone in the case that they have been buying financings recently probably do have some warrants in the money. It sounds like you don't really have a strategy, and that whole liquidity aspect makes sense. If you hold that many warrants and you just don't see the market depth, then fair enough, go for it. But it doesn't sound like you do have a strategy. Talk to maybe some of the people out there that do have warrants, that are looking at these stocks that are falling, but they're still in the money. But it does take some time to exercise warrants. So how you balance out what that risk profile really is when you do have the option, again, to exercise warrants, but if the share price isn't so much in the money right now.
Yeah, I mean, that's a hard one, and I don't have a clear answer on that. Usually it's like, because I mean, the reason I own something is because I think it's cheap, right? So, I mean, I didn't bet on Altamira, for example, going down to 20 cents, and I'm not good at market timing, and I don't really do I'm going to bet it's going to trade down. So now 1 month before, I'm actually going to exercise the warrant, sell the shares and buy them back later on. I don't think I'm almost never done that, I believe. And maybe I'm leaving money on the table, maybe not, because again, I'm bullishly skewed basically that I think Altamira should be trading much higher than 20 cents. And I hadn't actually decided at the time what I wanted to do, because the share price kept creeping lower. So it's like there's less of a bargain versus the open market. But when we were actually there, then I just decided, okay, I have to decide today. It's at 20 cents. There's not enough liquidity. I don't think that I'm going to be able to buy that kind of position in the open market at 20 cents. So it was just a judgment call. But sometimes it depends. Some juniors that I might have warrants in, and it's like I'm not really in love with the fundamentals of the company, whatever, and let's say it's 5 cents in the money. If I think, hey, yes, I can actually exercise this and sell everything immediately in the market, for example, and you get a 5 cent spread. Usually that's not going to amount to much money. So then it's like it's not a big deal, let's say. Because if it's that close, it's not typically going to be a lot of money. And if the share price is a lot higher, for example, then it's a no-brainer what to do. So it's hard to say. I don't have any rules or anything like that. It's simply, if they're in the money, they're expiring. You don't love the company, but you can take a 10% at least spread, and you think you can sell that in the market, why not? But at the same time, if you exercise too close to the exercise price, and by the time you get your shares, it's actually trading below, then you lost money on it. If you go forward with the plan that you were just going to take that, quick arbitrage, typically a small position, sell it immediately. So then you lost money on it. So it was much easier with Altamira again, because it's not a, quick trade. Is like, I think this is very much undervalued and can be trading a lot higher. So it's just made it easier to actually, let's say, get a bigger position, not actually trade the difference in warrants and the share price, because there was none. I don't know if I answered that in any good way, and probably that's because I don't really have a fixed strategy.
Well, I think it's an interesting thought exercise, if nothing else, Erik, because a lot of people are sitting on warrants. They're trying to decide what to do. And if it's close to the money, you really have to come down to, as you mentioned at the end with Altamira, you're in it because of the value proposition in the company. You see the fundamental reasons why it should be higher. It's easier to pull the trigger. And there is another option besides just exercising the warrants and then selling the shares. You can't exercise the warrants and hold on to the whole position, like you just mentioned. I think that's what the initial intent was back in the day, and now everybody's become warrant clippers. But you can just beef up your position if you like the fundamentals, and those are few and far between. But if you like the fundamentals of the company, something to think about. As far as Silver Tiger, thanks for weighing in on what you think as far as the Mexican permits, the valuation, how you look at the company now after a roadblock has been removed. And as always, looking forward to our next conversation.
Thank you, guys. And as always, consider me biased to your own due diligence. I own shares of all companies mentioned. Altamira and Sonoro Gold are banner sponsors, so twice biased.